Joshua Shigala from the Standard.io. Today we are talking tokenized gold and silver, precious metals. We're talking about real world assets on chain. We're talking about the challenges, the trials, the tribulations, the opportunities that are there. And that's all coming up on this episode of the deep dive with Chainlink. So yeah, this is the DeFi dialogues where we go and find the other projects that are working in the Chainlink build program. The standard is part of that, and also we have Golteum here. Alex Bowman, welcome.
Hey man, good to be here.
Yeah. Thanks for joining us. And for the audience, what do you think? Why did you go with the idea of tokenizing, precious metals? Where was that spark of inspiration and why?
It's actually kind of an interesting story. So the crypto and the DeFi world has been very close to me for uh, pretty much my whole career in the tech industry for the last 10 years. And you never really know where it's going to take you.
Yeah.
I was actually overseas on my first trip overseas a few years ago, visiting a conference in Dubai, and I just so happened to meet my co-founder on the conference room floor. And I wasn't really aware at the time. It wasn't until several months later that he kind of came to me over the summer of 2022 with this idea that he wanted to tokenize gold. It really started with a real world problem, and he wanted to, in London, he wanted to go and buy some physical gold. And what he found was, the the problem is, no matter where you go, nobody's going to give you a set price. There's always going to be some spread. You're always going to kind of, somebody's going to say, oh well, you got to buy X amount and we'll give you a deal. Or you know it might not it might not be as transparent as you would hope it would be.
Yeah.
So he came to me with the idea, and I really liked it, and then we started run with it from there.
Yeah, well, Dubai is known as the city of gold. It had one of the largest gold markets in the world outside of London, and the bullion markets there. So it's a good place to kick it all off. That's for sure. Yeah. So when was this? When did this all start?
That was in, like I said, the summer of 2022. So
2022. Yeah.
yeah, it was kind of the tail end of the last cycle.
Yeah.
And it's good that the bull run is, it seems to be back now. So
Yeah.
we're all excited.
Yeah, awesome. Well, for those that have been following my career in the space, know that I launched the world's first Bitcoin physical gold exchange and trading platform back in 2015, built it in 2014, and one of the challenges there was always like people were always saying, "Hey, you got to tokenize the gold, man. You got to tokenize it." And for us, the original idea was just, hey, I want an exchange where, because back then, people, as soon as you took any profits from crypto, the banks would shut your account down. So I wanted a way for people to be able to, A, have a transparent system because it's easy to count gold. You know how much gold is in the vault. You don't know how much capital is in the bank that's on fractional reserve. Like it's just all legally intransparent. And whereas gold, you can get it audited by BDO or one of these large auditors and just have it there. But the problem with tokenizing it, A, Ethereum wasn't around when we first launched, and so that the the surface that we could program on Bitcoin just wasn't there. We could have done a side chain or something like that, I guess, but it just wasn't needed. It was just a way to basically get out of the profits of crypto and put it into something that's not fiat. And also, I had this hidden secret fantasy that people would start pricing Bitcoin in grams of gold rather than fiat. Because I was like, "Wow, man, we all got into Bitcoin to get away from fiat, and yet we're pricing everything in dollars." Obviously, that never happened because we couldn't get enough volume, because that's really a volume play, that one. But nevertheless, yeah, we didn't end up tokenizing, A, because the technology wasn't there, but also B, it's very difficult with the fees that are inherent with real world assets. And this is something that I find absolutely a fascinating problem to solve, because if this can be solved, there is such a vast opportunity, such a vast. I think the gold industry itself, and obviously I don't need to tell you, but it's $13 trillion. We've just passed the $1 trillion in Bitcoin market, so there's a long way to go until we pass that. And that's just gold. What about silver? What about real estate? What about all of these things which people keep on going on about in the industry, but they don't have any true answers. And I think the answers are solvable, and you're doing great work in that. But I also think Chainlink has a big part to play with that, specifically with the transparency. So I just wanted to talk to you about that, because you're also in Chainlink build program with Golteum. So how are you using Chainlink's transparency? Because I think that's the key of, probably whenever people think of gold, they're like, how do I know the gold's there? Yada yada yada.
Yeah, of course. And first of all, the Chainlink team has been immensely helpful when it comes to just the relationships that they've brought to the table for us. I mean, you and I have had a couple of chats, and it really helps to kind of work through a lot of these problems with yourself and a lot of other companies that they've brought to us, a lot of subject matter experts. So one of the biggest things when it comes to solving this problem, the first place that we went when I got started with my co-founder Max was, I said, hey, we got to start working with Chainlink. They have a technology called proof of reserve that's going to be really big. And back in 2022, which it doesn't sound like that long ago, but in crypto, it's just like ages.
I know.
That proof of reserve wasn't really a big thing. um,
Yeah.
and you started to see, some companies kind of coming out with like their own proof of reserve,
Mm,
but
mm,
there's a lot of issues with that. It really needs to be an independent third party, because it's kind of just like, trust us, we have your money.
mm.
It's just like another added layer of questionability that I think some of these other larger exchanges have been kind of grappling with.
Yeah.
So Chainlink kind of came to the table with their proof of reserve technology that operates on, uh, it's essentially a framework for you to be able to say, hey, these assets are where they say they are on a specific time frame. So you have a heartbeat of, for precious metals, it might be 24 hours that they run an API call, and they say, hey, how many gold bars are in the vault? um, and then that information is then added on chain, and there's a public oracle where people can see exactly what assets are there. um, Now that's really important, because we keep having these kind of upsets in the space, when you have people like Sam Bankman-Fried and FTX, and Lunaterra, and just like there are insolvency issues in the Web3 space. But it doesn't, to me, it's really not all that surprising, because this happens in traditional banking all the time. We had bank bailouts in the US in 2008 and many times, prior to that. So it's not at all surprising that we're seeing that in Web3. But really, at the heart of what Chainlink is doing is just keeping everyone honest and saying, hey, we have a public ledger with exactly how many assets everybody has, and it creates this environment where it's very, very hard to kind of get away with the same sorts of insolvency problems and discrepancies that you've been seeing for such a long time.
Yeah, it's definitely a big problem. I actually invented a transparency protocol back in 2014 for Voltora specifically, called the Glassbooks protocol, and it was very basic, and it was going up against Peter Todd and Gregory Maxwell's version, which has been widely adopted now amongst the exchanges, which uses Merkle root proofs, just to throw some technical babble out there. But basically, what I found, what was annoying about that is, grandma couldn't get on there. Like, in a way, it was super easy because you would go on there, you go click, is all the crypto there? And it would go boop, 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 and a big green tick would go tick, tick, yes. And be like, so I've gone from trusting like just nothing to trusting this random green tick because I don't understand what's happening in the back end. And so we focused on basically creating a system where we would give everybody an anonymous ID. And so only we, as the centralized exchange, would know that because we issued it, and the client would know that. Obviously, they can give their accountants that and stuff like that. And then they would be able to log out of the system, and we would publish every ID with the amount of gold they have and amount of Bitcoin, and we wouldn't know that they were checking, so we couldn't fidget the numbers. So they could go and see what their amount of gold is and then sum up the entirety of the gold, and sort of assume, look, if their number's right, then everyone else's would be. Otherwise, somebody would be, screaming and yelling on the internet somewhere. And they could see the sum up, and then they could check that sum of all people's holdings against like BDO audit certificates, the voting facility statements, and insurance paperwork. And these were sort of the mechanisms. But I really like the fact that Chainlink has taken it to a whole new level with this heartbeat mechanism, and using API calls. I just think it's such a beautiful way to go, and it's absolutely imperative when it comes to tokenizing gold for that trust, and us moving away from a society from this sort of fractional reserve system that basically is one of the main reasons we've seen such a takeoff in Bitcoin, because it is, hopefully, if you're, well, not hopefully, if you're self-custodian, then you have the amount of Bitcoin. If you hold it on some exchange, you don't know that for sure. But if you had something like what Chainlink has, you could even do a proof of reserve of crypto on a custodian level. So it's fantastic, and yeah, I just can't wait to see more adoption of this technology.
Yeah, and it sounds it sounds like they've kind of solved the problem just with with that one core technology of proof of reserve. But it's actually quite, and this in working with it as well. It's like it's much more complex than meets the eye. So it's not like you just tokenize the gold and then Chainlink can look after it. It's
No,
I think I think right now we're working with no less than 6 different parties on between the bank, the APIs that talk to the bank. There's
which is a
auditors
very
that,
hard thing, by the way. Like, APIs
yeah,
talking to banks is almost an impossibility.
yes, yes, especially because a lot of these institutions are dinosaurs. They're on super super old bank software.
Yeah.
They don't have tech teams. They aren't really they're kind of protectionist in that they, obviously them exposing their their systems to anything that's not inside of their closed loop ecosystems are very, that's very dangerous, or it can be, or they view it as very dangerous. So it needs to kind of be a read only environment.
Yeah.
And still those APIs need to be very much protected and secure.
Man,
um,
you
so
know,
we have
if you walk into a bank, some banks still legitimately, not even kidding, you look around like at their monitor, and yeah, it's a modern flat screen, but they're running simulators to still have the green and black screens showing the data on there, and they have to like tab around this sort of thing that was written in, I don't know, machine code, back in the day, and with the 4.25 quarter-inch floppy disks that, like ridiculously archaic. And it's same with the airline industry. If it ain't broken, don't fix it. It still flies. We don't want to upgrade anything. We don't want to change anything. It flies. Just leave us alone. And we're like, we're pretty sure it's broken fundamentally, guys. Like it's just slow and crap, and you need to, think about.
Well, yeah, Southwest found that out the hard way last 2 years ago at Christmas time. They just like hadn't upgraded any of their systems, and then it just like it all kind of came to a head, and
Wow.
it created a lot of chaos in the U.S. But yeah, I mean, it's kind of a combination of bank software, some more modern, what they call an attestation framework. Um, they have a there's a basically an accounting firm that we're in the process of setting up an engagement with, that will allow us to verify that the API calls coming from the bank are in fact correct. So it's not just Chainlink that has to be involved there. There's this whole kind of consensus mechanism that's built around, hey, how much gold do you guys have? Has it been verified? Has it been checked off? And then also we need to have another third party come in and verify that the gold is real. Because you could just take a bunch of fake gold plated bars and then throw them in a vault somewhere and say that it's real. So we have to have somebody else come in and weigh it and verify that the authenticity is there.
Yeah,
So
and it's a
it's
lot more
quite a
sophisticated
complex
than just
process.
weighing. Yeah, because you can get
Yeah, exactly.
cobalt and cores and all this stuff. I mean, look, people talk about scams in Bitcoin, but gold has had 5,000 years of scams. So the gold
Hmm.
industry knows what to look out for. Every scam's been done. So
Yeah.
and that's the good thing about the gold industry. You kind of understand that attack space that's there. Um, yeah, there's lots of ways with electrolysis and passing different wavelengths through it. There's all sorts of ways of testing it, but that's great. Yeah, it's important. It's an important part of the whole thing. One thing we found when running Voltoro was really it was about insurance, solid insurance, because insurance would cover us for any dodgy gold, and we would just use one of the most solid gold dealers in the world, one of the largest in Europe, called Proorum, and a couple of
Mhm.
others, because during the pandemic it was really hard to get silver. Like, oh. But anyway, um, yeah. So I think a big step towards that is using really top tier retailers and having insurance that says, look, we will only use these guys, and if they're found to have any fraudulent bars, then insurance will cover any loss, and the insurance will underwrite that pretty well. Yeah.
Hmm. Yeah, I mean, the insurance piece is definitely another another tough piece of the puzzle. there's, compliance and regulations and, um, understanding, which jurisdictions we're going to be allowed to operate in when the platform does actually come out. There are a lot of considerations around like what you were talking about before, just in terms of like solving the problem of like how do you build a revenue model around around real world assets that take up space. So, for example, if you have a gold bar that's roughly this big, it's 60,000 USD,
Yeah.
and you might have, in order to get the same value in silver, it's way more.
Yeah.
It's quite a lot more weight. It's quite a lot more space. So having great vault operators, insurance providers, and just basically you have to. What we saw was like, okay, well, if we're gonna do this with gold, we can use the profit that we're gonna make off of gold, silver, and platinum to be able to subsidize the cost for vault operations for all three of them,
Mm.
because they kind of all have their own unique properties and their own markets. They're all kind of separate.
Yeah.
And the other thing, when it comes to long term, some things that we've kind of discussed. Once we've done all the smart contract development for building out these assets, if we find that it's so funny. I've been talking about this for like a year. What happens when you know AI discovers that nickel or cobalt or some random precious metal is the next thing that we're going to use for electric vehicles for
Yeah.
batteries?
Yeah.
And it's funny because I found an article the other day, and I think it was Microsoft has uh, uh, some AI that they just ran, and sure enough, that's exactly what it did. They
Yeah.
discovered,
Material
I think they
design.
discovered 18 new options for material design, with precious metals that they could use for to replace lithium,
Yeah.
which
Wow.
is
Nice.
which is huge. So what we want to do is we want to be in the driver's seat
Mm.
on those markets. So when we want to be ready essentially
Yeah.
for when those big moves happen in the market, so that the Web3 community can actually take part in that, because that's the biggest thing right now. Because if you wanted to go and buy, like, if you asked me where to buy platinum right now, I would honestly, I have no idea.
Mm. Mm.
Like, or just the average person wouldn't really know how to participate in that market.
Yeah.
um,
Yeah. Yeah.
so
It's definitely, but the metals markets, it's something that you can get a grip of. But I think where the real interesting stuff also starts to appear is, let's say, whiskey or bourbon. These have to sit in large anything that holds value for a large amount of time and gathers value. So whiskey's a great example because you have to stick it in these large barrels. It's fairly undervalued at that moment, and it has to sit there for 14 years, and or whatever it is, depending on how what you do. But having that amount of value sitting there, it's rife for tokenization because, hey, it has to sit there anyway. It it gathers value because it becomes very valuable towards the end, and you can start to trade and speculate on this valuation. And sometimes these barrels just go off, and you drink it, and it's like, oh, that was a terrible one, or like, wow, that is wild. That's the best one ever. So there's a bit of a speculation in there as well. So these things are really good. Obviously, people talk about real estate all the time. I'm a bit more skeptical on real estate, just because of liquidity issues.
paperwork.
paperwork, liquidity
Yeah.
issues, all of these things, like how many buyers can you get really quickly, unless you have a buyer of last resort, and then you get centralization issues.
Or
Yeah.
if you have a house fire,
Yeah.
it's just like you burned your token.
Yeah.
So it's my dad's residential realtor, and I work with a lot of commercial and residential real estate professionals in the Denver area, and we've talked a lot about tokenizing real estate.
Mm.
There are I was actually talking with a couple other co-founders at ETH Denver that are working on tokenized real estate, and these guys have a very different approach. They're doing I forget what is it, like section 108 or something. They're picking like government subsidized housing
Mm.
that's and they're buying like a lot of it. So
Yeah.
their like cross-sectional risk is a lot lower,
Yeah.
and they know that they're going to get paid because the money's coming from the government. It's very, very clever. Um, the difference between doing that and just like if you were to just like tokenize my house,
Mm.
what do you do if the tenant doesn't pay their bills,
Yeah.
or if there's a flood, or there's just like so many edge cases and
Mm.
things that can
Mm.
happen.
Mm.
And that's why we kind of wanted to work with the gold standard, essentially, because this is kind of just going back to how money got started in the very beginning. So there was basically, people had gold, and that was legal tender. And then they were like, well, this isn't great because I just got robbed and
Mm.
all my money's gone. So they're like, all right, well, we're going to start these things called banks. And then the banks were starting giving out, notes of deposit. But the problem was the banks weren't honest either, and they were just like, yeah, well, we're just going to write a bunch of notes, and then we don't, that was like the first. They were the OG Sam Bankman-Fried. They
Yeah.
were the first to ever do it,
Yeah.
that like the original FTX. So that wasn't a great way to do it either. But I
Well,
think if
it
we can
got
get
so
to a
bad that
place.
the French Revolution
Yeah.
started cutting off bankers' heads. Like, yeah,
Yeah,
maybe
exactly.
we'll
So
get
I
back to
mean,
that. I don't know.
I think it's going to be really interesting to see, what we can do when we kind of get back to that gold standard. A lot of people ask me this question. They're like, "Hey, like, where's the demand for gold?
Mm.
Where's the physical demand for precious metals?" And I think that one of the biggest problems with demand is really with supply, but it's not necessarily like physical supply, it's just accessibility. People don't necessarily right now have the ability to trade it on a spot basis. So there isn't much margin there to speculate. So it's not really something that people want to trade.
Look,
And
if
the other
if the shit
thing,
hits the fan in
go
a
ahead.
large way, sorry to interject here, but this is, you know, I think right now is when people are starting to have the aha moment that gold bugs have been rabbiting on about for the last 20, 30 years. They keep going, inflation, 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 inflation. The government's going to steal your gold if you hold it. Like there's these a couple of talking points that they go on, and everyone's like, ah, yeah. And now, finally, it's becoming mainstream and going, wow, milk's expensive. Holy smokes. I just bought this tiny shopping trolley and I'm like past 300, 400 bucks, if not more. And so I think now is when people are starting to go, okay, now we do have Bitcoin, but Bitcoin's too volatile. It's not a safe haven. It is for the people that can afford to have a safe haven. If you've got excess, if you can afford to lose something in the short term, you're okay with Bitcoin. But a lot of people aren't in that position, so they are. And look, it's $13 trillion market cap gold. So there's definitely a demand. It's just whether it's through industry of electronics and such, or if it's in the jewelry. Obviously, is a big one. Um, but there's a whole bunch of reasons. Photography used to be one of those things, but specifically in silver, but not anymore. But and silver, oh man, silver's got amazing use cases. But I do think now is the time where people go, oh, look, granddad, who kept on telling me, get some gold, is starting to make a little bit more sense now because through the 80s and 90s, what did you have to care about? What the Iraq War, that was it. And now, after, 9/11 and now through this pandemic and through all this money printing, we're at the stage where the youth, this next generation, sort of go, oh wow, man, it's not a given that our money just holds its value, and it's funny because it's not just the young, it's the baby boomers who were unlucky enough never to have bought property, who couldn't keep up with the inflation, and maybe the generation after the baby boomers who are like, fuck, things are getting so expensive and I've only got this tiny pension to live on. The young can re-earn and ask more money from their bosses, but the old that are heading towards retirement, they're sort of stuck on this fixed amount. And so they're the ones also going, man, I should put some of this in gold, you know. So it's definitely coming back.
Yeah, I think it is coming back in a big way, but there's a couple things that are about to happen just in the broader economy, I think over the next, 10 to 15 years. So there's a lot of really elderly people just from a global population standpoint. And it sounds cliche to say this, but the biggest wealth transfer in all of history is about to happen, and it's not going to be any specific industry. It's literally going to be the millennial generation, and like our generation is going to be inheriting all this wealth, all the gold, all the real estate, all of the bonds, everything that's out there and being held in trusts
Yeah,
from the generation.
it's
you know
happening.
they're th- they're going to die soon,
Mm,
and we're going to inherit all this wealth.
mm.
And personally, I don't think that we're going to spend it on the same things that they spend it on. I think that people are a lot more keen on diversifying their portfolio into lots of different types of things. So obviously, I think crypto assets are going to do quite well. Real estate's going to continue to do well. I think that bonds are probably going to suffer. A lot of these kind of like older investment vehicles, like CDs and savings accounts and stuff like that, the banks are going to, like, even the banks now are starting to, everybody's kind of like adopting Web3 because they're like, nobody's using any of these financial products anymore.
Mm.
People are just, they're like getting smart, and they're like, what am I doing with a 2% yield on my savings account? Like, why would I use that
Well,
when
yeah,
you could be
specifically
like,
when, yeah, sorry to interrupt. Sorry, Alex.
yeah, you could buy like literally any crypto asset and and do much much better than that. Obviously the risk is higher, but if you just inherited a bunch of money from your family's wealth, you're not really worried about risk.
Mm,
So I
mm.
think that people are going to be trying to look for places to grow their wealth, but also to be able to protect it. So
I, I
um,
I
and
think
and
there's
we'll
also,
talk about stable coins as well.
yeah, let's definitely touch on stablecoins, but I want to touch on something that you said there about risk. And the thing is, there's not just there are ri things that aren't as risky in Web3. Obviously, the whole technology, keeping your coins safe, there's that fundamental risk. But there are certain things which are purely more profitable, not because they're more risky, but because they're just far more efficient in the Web3 space. So rather than a bank and then you have the broker and then the broker has some lawyers who have to give it to some other company who then give it to a market maker who then puts it into a thing and market makes a little bit of profit, takes his cut, all the cuts go all the way back up to your Peasley little savings account who then gets, the last little dregs of leftovers. In Web3, you just go, oh, okay, I'm just going to stick this into a robot and he's going to market make without an order book. Like, I mean, nowadays you've got, kind of order books with these V3 pools, but with these concentrated liquidity pools. But nevertheless, you've still got bots dealing with that. So you are directly cutting out all of these middlemen. Sure, there's risk. There's always risk. Where there's profit, there's risk. But the risk isn't massively higher than, let's say, the bottom of the bond market falling out, like all of a sudden, or another 2008 financial crisis where the whole banking sector starts dropping its guts. Like we had, just recently the New York bank there, one of those banks in New York, just collapsed straight down, massive fat red candle. There's like things can just happen in the legacy world. So we aren't, just risk free because your money's in a bank. In fact, I would say, when I first got into Bitcoin, it was always like only put in as much as you're willing to lose. And I'm always telling people nowadays it's kind of flipped. The script is flipped to say like only keep as much money in the bank as you're willing to lose because bit suspect those banks.
Yeah, it's definitely an interesting concept, and it's something that we're, from an operations standpoint, we're kind of looking into, right? So I mean, and this is just a conversation, this isn't set in stone. So what we could do in theory is say, well, let me back up. In the US, if your bank goes out of business, right, you're covered FDIC insured up to 250 grand. So if you're really smart, you would just split up your wealth into a whole bunch of different banks so that you're FDIC insured in all of these different banks up to 250 grand. But if you got $100 million, like that's not really possible.
No.
So you got to start looking at other options, right? In crypto, if you're, you can get insurance, you can get crypto insurance. They do make insurance products for Web3 assets. You can use technologies that have multiple signature requirements like safe, or you could use an MPC technology, something like Fireblocks, which is what we're going to be using. But it gets really interesting when you start dealing with physical assets, because if somebody comes in and they clean out my wallet and they steal all my physical gold tokens, all my ERC20s, everything is on chain. And the thing is, the gold is still in the vault. So in theory, you could just burn those tokens that the thief made off with. He has nothing, and then you could just reissue those tokens to the user, and you rectify it within the exchange, and you keep everybody honest, and then there's no way for them to actually go in and steal your gold. So I think from a if we start working with family offices or bigger institutional players, I think that's going to be a feature that they really care a lot about.
Let's touch on that topic for a
Sure.
second before you move on, because I think it's a really, really interesting topic. And I like it. Obviously, there's really good virtues about that. But on a business level, I don't like it. And the reason being is that if you have the ability to reverse a transaction, then you'll be obliged to do so at your own
Right.
cost, at the cost of the company. And then you start becoming the judge, and you have to like every little nagging, I lost, somebody hacked me.
Right.
And you're like,
Right.
okay, well now, and this is actually what happened with PayPal. PayPal originally was meant to be kind of a Bitcoiny sort of thing, and they had the ability to reverse transactions, so they were forced to, and then you add all these overheads because you have to be a court, basically.
Well, this is yeah, that's exactly this is exactly why I wanted to bring this up because I wanted to shed some light on the complexity and the decision making behind uh, all of these different levers that we can pull when it comes to the smart contract development and what kind of options we have when it comes to how we set up the framework for how these things are built, right? So there are, there are a lot of options for us, and but as you had mentioned, if you create this one, framework, then it creates this whole other set of problems. It's the same as with if you have like MetaMask,
Yeah.
like straight DeFi, you've got the one key share. If your laptop gets stolen and you don't have your seed phrase, your money's gone. It's gone
Yeah.
forever. You're never going to see it again. And that person's probably not even going to have your money because they probably won't have your password for your laptop or for your MetaMask. So that
Mm.
money's just like locked up and it's gone.
Yep.
So we wanna create sort of a hybrid where there are some guardrails, but it's not going to be for everyone, and it'll only be for for certain aspects of the platform. For example, with the Fireblocks non-custodial wallet, there are two key shares there. The user gets one and Fireblocks gets one. We don't get the other one. So in the event that somebody actually did need to recover their wallet, they're not just, out of luck and they can never recover their funds. We
Mm.
don't think that that's particularly good for for the users. Obviously, it's going to be an arduous process. We're going to have to like work with that account and, get their passport and all of that, but it's not impossible for them to recover their
Yeah.
funds.
Yeah.
It's
Yeah.
it does create this kind of Web3, the the if you go between security and ease of use, there's a lot of nuance there to getting it
Yeah.
right.
Yeah. No, man, you hit the nail on the head, and I really like that approach. There's a couple of projects that have really tried to crack that nut. EOS just pops in mind as well. They tried to figure out, hey, if there's a hack, maybe there's like a double, a pool here, so that you have a spending account which you can spend off straight away. I don't know the ins and outs of it, but I know that they were working on something that there are cryptographic ways of dealing with this. And I think this is where, let's call it Web 4. I don't know. Let's, but whatever you want to call it, I think this is really what a good DeFi wallet needs to deal with this. Having and absolutely multi-sig is a solution, but having a multi-sig system where things just cannot move without alerts and things, and you have that as a savings wallet and then a spending wallet. Yeah, look, if you get hacked in that, you get hacked and it's gone, but you have, $100 in there at a time and no more. And then if you want to refill or whatever it is, you want to refill it, that'll take you a couple of days to get it out from the savings account because you need to go past those thresholds. All of these things will happen and they need to happen. And whoever cracks that nut first, I think, will do a good deal of profit. Now, I want to quickly touch back on the real world asset stuff because it does
Sure.
fascinate me. What happens? How are you dealing with death and or lost keys or stuff like that? Because you got gold sitting in the vault. What happens to it?
Yeah, that's a great question, and I actually I think about this a lot. You know, there's probably some guys out there that have a bunch of money in crypto, and they never tell their kids about it, and then they, you know, like their kids never, they either never find out about it or they don't get the keys from their parents before they if they pass away. You know, there could be like, you know, you die in a car accident and then nobody knows your password, and then like there's like $100 million sitting in an account that your kids can never get access to. So I think I think it really has, it comes down to uh to to family planning and awareness, and also building great tooling around some of those would be, I would say, like kind of like edge cases, right? We're not really, you know, that it's not something that happens every day with users, so it's not something that is like at the very top of our list. You know, we're trying to get the MVP out right now, so I wouldn't say it's up there, but yeah, you and I talked about this a little bit the other day when it comes to what happens if tokens just sit for 10 or 20 years. How do you pay for those tokens? So there's really two different schemes that we're really kind of looking at, and what we might end up doing is something of a hybrid. So you and I've kind of talked about this, where you have either fee on transfer, where if I buy a gram of gold, I pay some, you know, number of basis point fee to Golteum as a, you know, as a, you know, transaction fee. The other way that you could do it would be you could build a burn mechanism into the token where that kind of covers those fees. But where I've kind of taken this over the last you know, several weeks, and doing some research on that specific area, I think the hybrid might be the solution. And the reason for that is, if you do have somebody who comes in and they're like, "Hey, I want to buy a pretty large amount of gold," we have to then go, and it's not something that we can do instantaneously. If they want to buy, you know, 50 million, we need to go and source the gold and bring it to the vault, and, you know, and verify it. It's not something that can happen instantaneously unless we have that balance in our treasury. Then it can happen instantly, but it really
Sure.
is just going to
Yeah.
depend on what we have verified by proof of reserve, what we have already tokenized.
Mm.
um, what we could do is, you could build a burn mechanism in to where the storage and insurance costs are kind of, you know, nominally worked into the smart contracts, so that over time, as the gold is you know, is held in the vault, at least our costs are covered. But this is something that, you know, any gold buyer that's familiar with buying large quantities, they're already familiar with that. You're still going to pay storage and insurance costs if you go to
Totally.
any other provider.
Yeah.
So,
Yeah.
and a lot of times you'll pay a little bit of a spread. So, you know,
Mm.
it's nothing really that different than people are used to in the kind of, you know, Web 1
A-
world.
Absolutely. And people, I've talked to many clients, they're totally happy to pay storage fees. In fact, they don't like it when they don't, because they're like, what's where, how you pay? Because you have lawyers, you have the big doors, the vaults, the people with guns, the insurance, the you know, auditors. There's marketing, like there's a whole gamut of costs, and they got to come from somewhere. So
Yeah,
yeah,
exactly.
that's really really important. Yeah, and there's a technological thing there as well, where the fee on transfer is not working with things like Uniswap v3 pools, or some of the routing mechanisms around these tokens. So um, uh, maybe that gets fixed in the newer routers. But yeah, fiat on transfer for me is a terrible business model, because you have these fixed, very understood costs to your business, and then random, will Bob send his money this month? We don't know. Let's hope so. It doesn't make any sense. So I'm a big fan of the burn. You can do it in smart contracts. It's fine. People are fine to pay it because they know that that is the cost of holding this token. Yeah, you know, we're all kind of used to, this bearer-based asset. No one can take it away from me. But at the same time, um, when you're holding a real-world asset, you want to know that that's safe, and you want to know that you can go and get it at any time. And all of these things cost. So yeah, it's I think you'll find that people are all good with it. It's not a big deal. Yeah. Yeah. So where are you guys up to now? Like, Golteum is there. You've been going since 2002. What when do we see when Moon?
Yeah, so I know we've been talking about a lot of like really more complex things in this chat, which I feel like we haven't gotten to cover on a lot of our community AMAs. So I think that that's been great. But generally speaking, we're still working on the product. We're still fundraising right now. We're in the process of finalizing a lot of the details around vault operations.
Hmm.
And as we had kind of talked about in the beginning of the call, there are a lot of different individual parties that are involved in order to make that happen. And things only move at the speed of those entities. Like we
Yeah.
can't, there's no there's no rushing it. It's just, there's a lot of paperwork, there's a lot of attorneys, certainly a lot of costs there, when it comes to getting all of these things set up. But we're charging full steam ahead. We've got a great team. My co-founder Max and I work on this project 7 days a week. We have great smart contract engineers. We have obviously a ton of support from the Chainlink team. There's a couple things that we have coming up on the horizon. Max and I are going to be in Dubai for Token 2049. I just spent all last week in at ETH Denver. Fortunately, I have the home field advantage and got to host a lot of our colleagues from the Chainlink team and from other teams from all over the world. It's
Nice.
really, really great to see all these people come to Denver because it's funny when people ask me what I do. I'm like, yeah, I work in the tech industry. We don't really get into to all of these details because it's just kind of like way over their head.
Yeah.
But when ETH Denver happens, like
You
it's
can
the
talk to people.
degens, it's the VCs, the Bitcoin maxis, the Chainlink maxis, the just like the community of people that come to this event.
Yeah.
um it's really cool to see.
Yeah, yeah, yeah.
But
You got your crew. You got your crew. You can talk. You can talk tech. You can talk, problems, and yeah, get some actual feedback. Yeah,
Yeah, absolutely.
yeah, that's great. And it's so good to see like East Denver, also a project started in a shed, and grown and grown and grown to something this big. It's That's also really a great story.
Yeah, for sure. I mean, you can there's a gentleman that I met with that had some photos from ETH Denver in 2017. And I was actually hosting crypto events around Denver. I didn't even know about ETH Denver when we were hosting our events.
Yeah,
There were maybe like we would maybe have like 15 people there or whatever.
yeah.
But he showed me some photos from 2017, and it looked like a high school science fair. It was just like some like nerdy guys, with like a table. you know, like with just
a,
like
a
a piece of
volcano
paper with their
with
logo
some
on it.
sodium
Yeah,
flowing out.
yeah, yeah. Just like no swag.
Yeah,
It was like they had it at like a like a I don't even know, like a high school gym or something,
nice. Well,
But
it's
it's
changed
definitely
now.
grown quite a bit. Yeah,
Yeah, yeah, yeah.
yeah, it certainly has.
Excellent. So if oh yeah, one last question I had, and this is a bit of a tricky
Sure.
one, is what happens if you want to shut the whole thing down? Like you've got
That's a
tokens flying
that's a great
around, there's gold there, and I don't know, you just I can't deal with this anymore, and there's no buyer. I don't know. How do you wind something like that down?
That's a great question. So when it comes to the technical aspects and some of the larger questions that we're grappling with right now is there's really you either keep everything within your ecosystem and you keep everything on your platform, or you don't.
Mm,
So um, one of the key studies that I've been really focused on is that very question over the last few months, and looking at our competitors and kind of how they've either solved the problem well or how they've struggled. And if you look at something like Paxos, for example, they're kind of in a position where they need to keep selling more gold in order for them to continue, right?
yeah,
So there,
yeah.
it's a spot price. There's no burn and there's no fee on transfer. So it's my understanding that they make their money on the gold deals when they tokenize it,
Mm.
which is, that's a great way to make money. We're probably going to make money doing that too,
They
um,
do have a fee on
especially at
transfer. They do
scale.
have a fee on
They
transfer,
do.
but yeah, but I don't quote me on this. I think it's just turned to zero at the moment. Yeah,
Right.
yeah.
But the thing is, if they wanted to shut down operations, it becomes very, very hard, because you have
Mm,
like all these tokens are just out there, and then
mm,
you're like, okay, well, are we just gonna like shut everything off and then pull the gold out of the vault, and then everybody's just like
mm.
left with the bag? So as soon as that happens, then it's a race to the bottom. Everybody's trying to sell they're trying to sell their
Yeah.
tokens. Um,
I
so
think this is where communications for token holders in a general concept is really useful. And this is a nut that has to be cracked in DeFi still. Because inherently you can stop spam because it'll cost something to send messages to all these people. But we need to solve the problem of sending messages to token holders because I don't like to bring up, to a budding entrepreneur, how are you going to shut your business down? Sorry for that.
yeah,
That's a terrible question,
right,
but it is a question that's important. And really, at the end of the day, what comes down to is, hey, uh, it's this your 6 months notice where change your record, whatever. There's some regulation that's stopping us from operating properly, and we've tried this and that. Whatever the reason is, we have to slowly wind down. You've got 6 months, and here's the contract you send it to, or you can go pick up the bullion here, or whatever it is that you have. But you want to be able to tell people that right now. Once these things start flying about, who knows? Who knows where they are?
right,
Who's got them? You could send an on-chain message, but you and I know most of the people will never see that message because they wouldn't even know how to
right.
check for that on-chain. And so,
So in the beginning, at least for the foreseeable future, we're going to keep things on the platform, just to kind of rein things in. I think that
yep,
if you start issuing a bunch of tokens and you start putting them on a bunch of other protocols, and you start shifting them around in a bunch of places, it
yeah,
creates a lot of risk,
yeah,
because you know we might build a really strong protocol. We might be working with Chainlink. We might have like, CCIP rolling on the platform. Everything's
be
safe and
sweet.
secure. And then we integrate with some, liquidity provider or a lending platform or something else, and then we issue a bunch of tokens to them that are gold backed, and then it's wormhole and they get hacked and all the tokens go somewhere. And then we're
Yeah.
like, okay, this is not, it's just not a good situation for anybody, because all the users that got affected by that are going to be upset. We have to then reconcile and figure out what we're going to do about all those tokens. And then it just adds, like, it's like, if you really only get one chance before you
Mm,
break everybody's trust.
mm.
So, that's why we're going to try and, do everything by the book. We've got, great developers. We've got, the Chainlink team is going to come in and help us with, um, you know, uh, review of the platform. They have great auditors that they've recommended. So
Awesome.
everything's going to be, done above board.
Yeah.
But yeah, I mean, I think later, once we have a better, more clear picture of where things are going to stand from a regulation standpoint, we'll be more open to it. But um, for now, we're just going to kind of, keep things within our ecosystem.
Nice. Yeah, I just quickly here, I want to pause for a second before, and I
Sure.
just want to let people know that we at the Standard have just released our Dune dashboard. There you'll be able to see exactly TVL locked in. We've just relaunched like last week, already got 1.15 million TVL locked in there. A lot of that's still from the original launch, but it's we're about to repeg the EUROS after all of the audits have happened and everything else like that. But this this June dashboard is a really great way to check out how much collateral is backing the entire system. So for you guys that don't know what we do, the Standard is a 0% interest borrowing. It's a way to borrow crypto or stable coins at 0% interest by locking up a whole portfolio of assets into smart contracts. So you only control your private keys. No one else. We can't get touch your crypto. It's yours. And we've had enough of all these Celsius and FTX and nonsense like that. Technological solutions where you lock up crypto, borrow against it at 0% interest with only 110% collateral. Here are these. It's all free and open source. It's awesome technology, all built on Arbitrum. Obviously, using Chainlink tech to make sure that the oracles are keeping the price fees and everything like that. Because if you cross that 110% collateralization, then your vault gets liquidated. And that's the other thing that we just launched is our yield accounts, and they're fantastic because you can go and borrow some EUROS, put it in those yield accounts, and you start earning every time someone trades on the Standard. So if people lock up assets and borrow against them, they can't take those assets out until they pay off that debt, but they can still trade. They can go and we're just about to put GMX token on the platform and a whole bunch of others. And when you guys launch it, Golteum, we'll stick tokenized gold on there as well. Right now we've got Pax Gold, but it's very low liquidity. So, but generally speaking, it's just stunning because people get to swap and trade and not miss out on some great opportunities when the market changes. And all of those trading fees get dropped down onto the yield accounts from people staking EUROS and the government's token TST. So great stuff. I'm really proud of the team. This is just a fantastic way of checking out where we're all at the Standard and how the Standard DAO is growing further and onward and upward. Yeah. So, did it not show? I had
I
it.
think it was up for a second.
Was it? It was. Oh
Yeah, I
yeah.
think it was up for a sec.
There we go. There you can see it. So that's the June thing, and I'll link this in the show notes if you want to have a look. You can see all of the different statistics. Obviously, the collateralization to debt ratio is awesome, 659% over collateralized the EUROS. So it's definitely got a lot more value than stablecoins floating around. The fees generated will be here. We've just relaunched, so it's going to go up. But yeah, I'm just so happy to see this because it really gives you a solid visual of what's going on, and all data getting pulled on from on-chain data. So yeah, super stoked with that.
Yeah, this is really cool. I actually saw a presentation from the Dune team at ETH Denver.
Yeah,
So it's cool to see that in action. And it's great to be on with you. And it's so cool what Chainlink has done with the build program, because they've brought together so many great minds from all over the world that are working on really interesting projects in so many different sectors and so many different
yeah,
areas. So and now it's, we all have kind of this unique opportunity to help each other out and work together to, to share ideas, and kind of, a rising tide raises all ships, right? So
it sure does.
great to be here with you.
Thank you so much, Alex, for joining us. And if anyone wants to reach out to you or find out more about Goldium, where do they go? How do they find you? How do they hunt you down?
Yeah, for sure. So you guys can find us on Telegram. That's a great place, either Telegram or on Discord. Our tag on every platform is just at Golteum. Yeah, we're in the middle of our token presale right now, so you can go to our website and check that out as well. So yeah,
Awesome. And what's the
it's
website? Is
been a
that a
pleasure.
.com or .io?
It's Golteum.io.
All right. Yeah.
Mhm.
Awesome. Well, good luck with everything that you guys are doing. Please stay in touch. If you ever got any news, hit me up. We'll have you back on, and keep us updated with yeah, everything's happening. Alex, thank you very much.
Yep. Thanks, man.
Cheers.
Take care.
And if you guys want to stay in touch with what we're doing, go to thestandard.io. Man, so much stuff happening in the next couple of weeks, so stay tuned. The liquidity is going to be dropped down on Ramses DEX. That's where we're going to have our main liquidity sync as of next week. We'll be pairing with Angle Money, with Angle Euro, so it'll be Euro pair, and we'll be also getting closer and closer to launching the USDS. So you'll be able to lock up your funds and actually go and borrow USDS, which is our USD stablecoin, obviously. Yeah, and have go and give it a try with the swapping. It's fantastic. I'm really happy with it. Give us any feedback if you guys think something's not working. Jump on to the Discord and give us some feedback, because hey, this is all a community-driven project. It's all free and open source, so we appreciate any help we can get. Until next week, thanks for joining us for the DeFi Dialogues, the Chainlink build series. Thank you very much, everybody. Bye.